Zen in the Markets, Allen Toppel. The rules of profitable trading are almost embarrassingly simple, and nearly every trader already knows them by heart, which is exactly why knowing them changes nothing. Core thesis. Allen Toppel spent years as a market maker on the Chicago trading floors, and his book is deliberately deflationary. Buy low and sell high. Cut losses and let profits run. Add to winners, never to losers. Go with the trend. Nobody disputes a word of it, and professionals and amateurs alike violate all of it, repeatedly, while knowing better. So the fault was never in the rules. The fault is in the operator. The saboteur has a name in this book. Toppel calls it Big E, the ego, and its chronic condition egoitis, the terror of becoming irrelevant to your own decisions. The ego needs to be right, so it clings to losing trades, hoping to be vindicated, and dumps winning trades early to collect the small reward of being correct. That is the exact inverse of the rules, executed with total conviction. His blunt formulation deserves to be remembered. A great many people, he says, would rather be right than make money, and their egos are quietly making every decision. Trading well is therefore a work of subtraction, not addition. Not a better system, but a quieter self. Saying goodbye to Aristotle. Most people arrive at the markets armed with cause and effect logic. This event happened, therefore the market must react that way. Toppel says that reasoning belongs in a university, not a trading account, and history keeps agreeing with him. Debt crises that should have crashed markets preceded roaring bull runs. Disasters that should have mattered were shrugged off in a day. The logic was impeccable, and the predictions were wrong, because the market answers to its own logic and will not tell you in advance how it will react. The lesson is not that analysis sometimes misses. It is that even the best informed opinion is still an opinion, and the market owes it nothing. Give up trying to lead. Watch for the market's signal and follow it. Toppel calls the market the perfect master. Always right, never lying. Speaking one language, which is price. The last sale is the truth. Anyone can read it. The entire challenge is obeying it. The bargain hunter's curse. The book's sharpest observation is that our worst trading instinct is a virtue everywhere else in life. From childhood, we are trained to love a bargain, to buy the thing that has been marked down. Carried onto a chart, that reflex becomes buying weakness and selling strength, which means fighting the very trend that pays. The stock that has fallen from 80 to 36 feels cheap, so the bargain hunter loads up on the discount while the trend grinds it lower still. Toppel rewrites the old saying without apology. The money is made buying high and selling higher, or selling low and buying lower, moving with the current instead of against it. Picking tops and bottoms is an ego game dressed up as cleverness. Fighting the trend is swimming upstream and the river does not tire. His entry logic is almost comically simple. If the last price is higher than the one before, the market is rising, and you assume it continues until price itself says otherwise. This is not prediction, it is reflection. The markets have no memory. Markets are like dice, Toppel writes. They have no memory. Only we do, and our memory is the leak. The past seeps into the present as regret and false pattern matching, and the future seeps in as hope and fear. Traders who reached back to 1929 after the 1987 crash saw a depression coming, positioned for it, and were punished as the market climbed instead. The parallel was vivid and worthless, because every moment in a market is new. The discipline is to keep attention pinned to the only thing that exists, the current price and what it is doing right now. Not the entry you regret, not the round number you are hoping to see. And because that presence is genuinely hard to hold, Toppel prescribes a mechanical substitute for anyone who cannot watch every tick. Decide the exit in advance and anchor it to a fixed slice of capital, so leaving a bad trade never has to wait for the ego's permission. Double up to belly up. If the book has one cardinal sin, it is averaging down. Toppel calls it the worst mistake a trader can make, and he warns that the real danger is the times it works, because every successful rescue teaches you to do it again, until the one position that never comes back takes everything. He watched a client average into a collapsing blue chip all the way from the 70s into single digits, absorbing a loss in the millions before the company ceased to exist. The arithmetic the ego whispers, that a lower average needs only a small bounce, is a trap, because nobody is owed a bounce. The companion sin is size. Traders who are calm and consistent at small size routinely destroy themselves the moment they scale up. Because the pain of being wrong does not scale gently, and pain is what freezes the finger over the exit. The ability to take a loss instantly, the exact skill that separates the winners, is easiest when the loss is small. So the survival kit has 2 items. Never reinforce failure, and keep every bet small enough that admitting it costs almost no pride. Osiris Capital Trading Desk holds both lines with you as arithmetic rather than sentiment, supporting additions only to positions that are proving themselves and checking the size of every trade so no single mistake can ever matter much. The one-question audit. Toppel offers the simplest diagnostic in all of trading literature. Are you holding a losing position right now? If the answer is yes, past the point where the plan set out, then the ego has the wheel, and you take back control by getting out immediately. Not once it proves you right. Now that audit runs continuously inside Osiris Desk. The moment a position sits beyond the line the plan drew, the coaching narrows to the exit and nothing else. Because every second spent negotiating with a broken trade is the ego buying time with your money. The zone and the gap. The climactic idea comes from the samurai tradition and the psychology of sport. The ideal action leaves no gap between the signal and the act. Toppel traces his whole inquiry to one frantic, hugely profitable day on the options floor, which he realized afterwards he had traded in a state of complete self-forgetting. No commentary, no hesitation, no self-conscious narrator, just perception fused to execution. Athletes call it the zone, and it is the state where the ego cannot interfere because there is no room for it. Reading the signal, he insists, is easy. Acting on it instantly is the Herculean task, because everything in you that wants to pause, to check, to be sure, to be right, arrives in exactly the gap where the money dies. Discipline, in this book, is not superior forecasting. It is the trained reflex that closes the gap, built through repetition until execution stops feeling like a decision. Tighten the helmet cords. Toppel is disarmingly honest about his own record. He trades beautifully for months. The ego creeps back in, and the losses return. Discipline, he concludes, is not a trophy won once, but a state you must keep re-entering, because emotion is always waiting for the controls. His samurai borrowing covers the most dangerous moment of all. After victory, tighten your helmet cords. A winning streak is precisely when the size creeps up, the rules bend, and the plan gets abandoned, because the swollen ego is certain it no longer needs one. Osiris Desk watches for exactly that drift. It catches the size that creeps up a little after every win. The rule bent once because the week has been green, and the setup taken that matches nothing in the book. It names each one, while it is still cheap, because a streak is when a trader is most fragile, and feels least so. Empty the cup. The book closes with the practices Toppel used to manufacture the egoless state before the session, rather than summon it mid-trade. Quiet breathing until the mind settles. A rehearsal of the day ahead, explicitly visualizing losses taken quickly and winners left to run, so the correct circuit is warm before it is needed. A short affirmation to point the subconscious at the plan, and a short list of commandments. Never add to a loser. Add only to winners. Let profits run. Cut losses fast. Pick no tops. Pick no bottoms. And let the market, never the ego, make the decisions. His favorite parable says it all. A professor visits a Zen master to learn, and talks so much that the master keeps pouring tea into an already full cup. You cannot receive anything, the master explains, until you empty the cup. Arrive at the market without a forecast to defend, and the market can finally teach you. Bottom line, Zen in the markets is short, strange, and more practical than 100 thicker books. The rules of winning are simple and already known. The entire work is removing the self that refuses to follow them. The ego that clings to losers, snatches winners, fights trends, and argues with a market that was never going to negotiate. Name the enemy precisely. Keep every loss small enough to admit instantly, and let the plan act in the gap where the ego used to live. The trader with the least self to protect is the one who wins. Few things in trading are original anymore, and what actually matters is whether principles like these get followed on the days they are least convenient. Osiris Desk is built around that same daily test, an advanced platform for trader development and disciplined trade management, and the flagship of Osiris Capital. It passes that test by keeping this very book close at hand through every session, instead of setting it aside once it has been read. It answers the ego with a plan, points at the exit the moment a trade sits past its line, and tightens the helmet cords with you after every winning streak, until following the market instead of the self is simply how you trade.